All right, welcome to part two of episode six for Richard Opor. This is the equity partner, and I have a chance to interview the Mitchells, who've been married for 49 years, and they both have combined over 70 years experience in financial services. This couple is a great couple that I've had the pleasure to know. I've had the pleasure to be mentored by. And I'm extremely grateful to have them on. So thank you all, Lawrence and Dee Dee Mitchell, for joining.
You are very welcome. You're very welcome.
Well, we look forward to being with you.
Well, thank you again. So tell me a little bit about just your personal background for people that don't know you. One, individually, who you were before you got married, and you don't have to tell all your bad secrets, but also when you got married and how you got to this point.
Right. Well, actually, we started, Dee Dee was my, I guess, high school sweetheart. Okay. So we go way, way back. So although we've been married 49, but we've been together a lot longer than 49. And the interesting thing about it is that I met Dee Dee, actually was at her cousin, went to a party at her cousin's house. And I was standing around, and my favorite song and my favorite artist came out, Smokey Robinson with Ooh Baby Baby. And I saw this young lady standing against the wall, and I went over there and asked her to dance. And she said yes.
And here we are. so here we are.
So that was the time that we became, I guess, friends after that, and started talking in high school. Like I said, we were in high school together. Mm-hmm. And then we just built a relationship over time.
Yeah, and we were actually married at a young age. We did college, mm-hmm. and then both of us started working. And so from the financial side of it, I went into banking, mm-hmm. and I was, I guess, fortunate enough. I worked in the trust department, which is now called wealth management. Mm-hmm. And actually my 45 years have been in what's called wealth management now, but on the institutional side, not on the personal side, mm-hmm. but the institutional side. So I had the opportunity to really start in operations in a clerical position.
Okay.
And as a result of the clerical position, and it was on the accounting side as well as the securities processing side. And so I was able to, and people recognized the potential. And I was one of the ones that they moved me, and I didn't ask for any more money. I was too naive to do that, but I gained, wealth of experience, mm-hmm. and stayed in that whole arena my whole career. But through four mergers, and starting in operations and on the security side, mm-hmm. and relationship management and management, mm-hmm. and I actually retired, so not so much in management, because afterwards I went to special projects and so forth, and then retired.
Now, one question I have for you all too, I mean, as far as how you grew up, I mean, did you grow up in situations where you talked about managing money, or were you inspired by somebody in your family that was in banking or financial services? What drew you to financial services?
Well, with me, I think it really goes back to, I guess, my childhood with my father. Mm-hmm. My father was a provider. He, made sure that all the bills were paid and everything was done correctly. So I kind of looked at his example in terms of how you should do things. Because at one point, I thought that some of the things that he wanted to do financially, I thought was, hey, this is a little outlandish here. Mm-hmm. But then as I got older, I realized that, hey, he was a visionary. He really knew what he was talking about, whatever. So as a result of the things that he taught me in terms of handling finances, how he handled finances within a household, it made me want to be that kind of person as well. Mm-hmm. So mm-hmm. that's how really I kind of really got my because really early on in banking, as I mentioned, I was in banking, that we didn't have a lot of role models back then in those positions really that you could, as mentors at that particular time.
Yep.
So we had to kind of just what you picked up at your household was what you carried forward in your life.
Right. And on that particular note, it was totally different for me because again, getting into the trust department or the wealth management side of it, to see millions of dollars and seeing clients that had dollars, had stocks and bonds. I didn't know that. I didn't know anything about that. My family did not have.
Yeah.
And so the one thing I can say that kind of sparked me was that we didn't have money. And so even when we got married, and the question has been asked, what was it you were looking for in getting married?
Yeah.
Well, I don't know that at that particular age I knew, but I knew what I didn't want. And that was to be in the financial position that my parents were growing up.
Yeah.
And I always tell Lawrence that I think God answered my prayer because lo and behold, if this man didn't take charge, take charge, and we'll talk about that later, of having the balance, for husband and wife. But I know now that God answered my prayer because of Lawrence and God's grace. Because I want you to tell, I'm an inspirational individual. But because of that, I think it just kept us out. We didn't always have, but we never got in financial debt to a point that we were struggling.
Yeah. So when you all got married, again, Dee Dee comes from a background, didn't really have a great deal, but got into a profession that exposed you to a great deal.
Exactly.
And then also with Lawrence, he had a hardworking father that was a visionary.
Yeah.
How did you go in and say, all right, we're two, we've become one, and now we need to manage our funds, and we need to make sure we prepare for our kids. We need to prepare for retirement. What things did you do that helped you along that way?
Well, I think initially, like we mentioned, we worked at a bank, and Dee Dee had her account, and I had my account. So we pretty much, when we got married, we lived in an apartment, whatever. She had certain bills she paid, I had certain bills I paid, and things were lovely. Yep. And then we realized too that although we were together, but we really weren't together financially. So we had a friend of the family mentioned to us, hey, look, why don't you guys, put your money together or whatever. And then we said, you know what, that makes a lot of sense, because then at that particular time, we were thinking about buying a house and whatever, and say, hey, we need to really not just, you have your account, I have my account. Let's just kind of come together.
Right. Yeah. And what I would say to that, we had to get out of the my money versus our money.
Yeah.
And again, because I started working, and the one thing that I didn't, that I refused to do, was to let my checking account get down to a certain amount. I don't care what. And back then it was $100. I wouldn't let my checking account get below that. And because I never wanted to be broke. So we had to, when we went into the marriage, Lawrence had the car, everything. I had the account with the funds in it. So it was hard for me saying, because he bought the car and all of that type of thing, to say that was our money versus my money that I saved. So we had ups and downs, and I would tell any couple that if you're not on one accord, and we weren't, we had to learn, we were not on one accord, that's what caused the issues, with it. And then I think the other side, and maybe Lawrence, you would agree, that even though we were married at that age, we didn't have any children for 5 years.
Okay.
Yeah. So that I know was a plus. That wasn't intentional. We just never thought about it, but we had some growing up to do. So it paid off that we did not get married. And back then in the 70s, you got married and you had kids. Yeah. And we didn't. And that just happened to be a blessing, that we were married 5 years before we had any kids.
So when you all had kids, what changed about how you manage money?
Well, the expenses picked up, with daycare. I think daycare was a big one. So that was really a milestone when I think we were counting the months and the years that our kids would get out of daycare, and then we'd add back to our budget.
Yeah.
So that was kind of something that we really was concerned about. But again, having kids, that's part of, you got to take care of them. You got to give them the best education you can. And that's
Yeah.
what we wanted.
Right.
So,
And I think one thing about having children, and even in particular now with our son, and daycare, that is a big issue. But we stayed here. So a big help was having my mother here, my parents here to
Okay.
help. So, that was truly a big help. And then that's when we started thinking that we actually needed, we moved out of an apartment and bought a house. We also did all of that before we had Chris.
Yeah.
We did that. So that made a difference. Apartment was small, trying to, get in a neighborhood, to raise a child. So, it was just important. But I'm not even sure that, and maybe we thought about daycare or whatever, it was 5 years, it was time, to have, and he was in banking, and I was in banking, and we had to go on maternity leave, and all of those things.
Yeah. Yeah. So you felt like you had stabilized a little bit. You were ready to have kids.
Yeah.
You had kids. Then Lauren saw that daycare bill, and he's like, "Oh, this is more."
Yeah. Yeah.
More,
And couples need to think about it. I mean, it's wonderful to have kids, and we're thankful, but there is an expense that comes, and I don't want to say, well, don't have children because of the expense, but that's part of it.
Yeah.
That's part of it.
But I think the other side of that was the fact, as you said, is that, when you live in the same area with your parents, you can get a little bit of help. And that was a great help to us too, financially. Because one of the things, maybe just back it up just a little bit too, is that, as Dee Dee mentioned, when we bought a house, we left the apartment and went back to live with my parents temporarily so we could save more money so we could move into a house.
That's true.
So that helped us a whole lot.
Yeah.
So you had to sacrifice to be able to get the house that you wanted.
To get our first house. Yes.
And when you bought your first house, what did that process look like? I mean, how did that go? I mean, as a new homeowner, you'd done the rental thing, but now you were moving on to buying your own home.
Well, one of the things for me, I guess part of my background, working for the bank back in the early 70s, I was a credit manager for Central Fidelity for years. So I kind of, understood that process in terms of what would be required, what would be needed, and what would be the possibility of us getting the home that we really wanted.
Yeah.
So once we had everything all lined up, I said, let's go for it. Let's do it. So we were able to do that in short order. And I think it's really funny part about it too, is that when we started looking for a house, we didn't realize that when Dee Dee told me about the particular house, it was next door to her brother. We didn't realize that we were buying a house next door to her brother, because the real estate agent, and then we ended up living side by side.
Yeah, we did. And one of the things interesting, because again, no one sat and told us this is what you do, the financing. There was, our first house was a loan assumption. So we had to put down a certain amount of money. We worked 2 jobs, trying to save for this down payment. So we were also, that's another thing, I've been in banking and on the wealth management side, but I also would go and work the drive-in window from 5 to 8. The bank stayed open, and I would go and work that. And back then, it was big. We were getting $7.50 an hour, to go and work that. So we did that job, and then it happened to be a loan assumption. And all we had to do was put a certain amount down, and we picked up everything. I know you know that, we picked up that payment.
Well, I know and understand it, but there's a lot of people that do not know exactly what you're talking about. And so to assume a loan, just explain it just a little bit to people that might not know.
Right. Well, my understanding of the loan assumption, you had to, and actually it was $5,000 is what we had. That's what it was. And it was, what do you call it? GI loan. I mean, it was a loan through the military, I guess, is what they had. Veteran. But we were able, we were able to do it, and we had no idea when we saw the ad in the paper, and then going in and finding out we could assume the loan. The $5,000 was a lot of money
Yeah.
in the early 70s. So we had to work to do that, because granted, we had bills to pay and you need to set aside a certain amount of money, but we did it. And like Lauren said, we moved out of the apartment, sacrificed, moved in, because the house wasn't going, the people weren't moving out until June. So that gave us some months. And then his parents didn't charge us any rent, nothing. So all of those things helped us to get this lump sum of money to actually assume the loan.
I got
So, you know, and back then, our payment was $170 some a month.
Oh, yeah.
Back then, back in the day, seriously.
Yeah.
But that was a lot of money. And that's hard for people now to realize that. But, you know, salaries were what they were and all of that. But yeah. So that's how we got the first house.
Well, I mean, it's also an excellent story just about what you all sacrificed to be able to get what you really wanted. And you were looking to grow your family and buy a piece of real estate. And that home probably led you to purchase your next home.
Absolutely.
You know, so it probably was a great help going to the next house. Tell me about some of the lessons that you all have learned throughout your relationship, kids going to college, just over that long amount of time that you would say would be helpful to not only yourself, but also to other couples.
Right.
Well, I guess to start with, you know, I always said you need to pay yourself first. In other words, like a savings account to put monies away for like unexpected expenses and whatever. You know, some will say that you need to have at least 6 months on the sideline. Some say a year. Just depends on how you spend your money. Also, I think in terms of whatever institution you work for, if they have 401k and they were matching funds, whatever, I think those are great things to be a part of. You take advantage. You don't want to leave any money on the table. And a lot of people used to think that if I can't put in the total amount, they don't put anything in. You know, I only can put 3% rather than 6%, although they're matching 6%. So I say to that person, no, go ahead and put the 3 in now, which you can put in, let them match that. But your goal is to work towards getting to that 6%, so you can get all the money that they will give you. But, you know, the main thing, like I said, is to make sure that you prepare for the unexpected expense, because they're going to be an unexpected when you have kids, whether it's college. And we were blessed enough that, of course, we had 2 sons that went to George Mason. They both finished George Mason. And when they walked across that stage, neither one of them had a loan. We paid for it, everything. So that was a blessing that we were able to do that. Yeah.
Right. And with that, I would say that we truly had to think about the dollars. And where we have 401k now, of course, you know, we both retired with pensions, and, you know, those things have kind of gone away, but you have to but before 401k, it was the stock purchase plan. So again, you know, I knew nothing. My parents didn't have any stocks or bonds or anything, but we could enroll in the stock purchase plan. So a lot of times you think you need your money. And so for what we're now, it's a 401k, you have to do that. Then it's a sacrifice, because a lot of times you think I need the money to pay bills, and you're not thinking about the future. You're not thinking about what about the kids from school, you know, for college education. But that is something that we told our sons, and we tell anybody. And to Lawrence's point, you need to make that sacrifice to get that. You need to, in your regular, if you can only put in $50 a month in your personal, try to have a personal savings account, and that's going to go up and down. You need to say, we had to save personal sometimes. Sometimes we didn't. And when you move into a house and you need things and so forth, then all your money's gone and you're starting all over again.
That's right.
You just have to make an effort to have that, and then you need to communicate. So, you know, talking about the things that we did, but it's a journey. You're learning along the journey. Your income fluctuates, you know, up and down. You know, and
but
you've
I think you learn that.
Well,
I think you learn, like you said, as your income go up, you learn about, you know, what are needs and what are wants, the difference between the two. So when you're trying to build something here, you need to look at what are my needs, what are my actual needs in order to get by and to provide for my family. And then as you can do better, then you look in terms of, hey, look, we can do a little bit more here, a little bit there, whatever. But I think you have to put it in perspective. And I think sometimes folks tend not to.
And Lawrence, one of the things you mentioned, which I think should be commended, is just the fact that you had 2 kids go to George Mason, and both of them graduated without having student loans. And you also were able to both retire not too far apart from each other. And those are tremendous accomplishments. And what I will ask for somebody else and also for myself is, how do you think you were able to accomplish that? When did you start saving for the kids' college education? And it sounds like you maxed out to the match of what the company offered to at least max out your 401k. Did you have any other side investments that helped you, reach the point to retire? So those are 2 questions. Just one about how were you able to save for college education? And then how were you able to save for retirement effectively?
Well, I think the number one thing, I think we were blessed at that time. Our careers were taking off. And Dee Dee was doing well on her job. I was doing well on my job. So our income substantially increased. So we were able to, hey, look, this is what we need to, whether it's $1,000 a month or whatever it was we needed to do for the college, we can do this. So what we ended up doing is that, like the cars that we had, whatever, let's say, okay, these are long-term, we're going to keep these cars for a while. At least until these kids get out of college. So what we did, we sacrificed some of the things that we thought our wants, what our actual needs were. So we needed to have the money so we could pay for their education, so that they could go forward and not have that burden of student loans at some point. So that's how and again, back to saving, whatever, is I always say that if you want to retire early or retire at all, make sure that you save more than you spend.
Yeah, those are his famous words. And when Mark was in the 9th grade, that's when the 529 that started. So it had to start in the 9th grade for us to put away enough money, for him to go to school. Again, here comes where we have to agree or disagree. And so Lawrence didn't want to participate in that. He said, we can do an investment on the side, the same amount of money that we could put away in that we could do. So that was an option that we took to do that. But what we actually sent them to school, to college on, was out of our cash flow. Our actually monthly cash flow. There's a program that we happened upon to find that you would set up a payment plan. And at that particular time, it was Flint. There was a bank called Flint National Bank. And it was through that bank, and it was AEM, and that stood for, and I cannot remember what, but anyway, we had to calculate tuition and board. We had to do that, not books or anything, but come up with a total. Say it was 10,000. And then we divided that by 9 payments. We had to divide that by 9 payments. We started paying it in June, from June to March. We sent that money to Flint. And then Flint would send the money to George Mason. So that monthly payment, it was almost like another little mortgage or a vacation home. Because with Chris, it started at like $600 or $700 a month. When Mark finished, it was $1,300. So Mark, we had a break, and it was $1,300 because tuition had gone up. But that's also how we did that, and we just saw the information on it, and all you had to do was send $25 to get a certificate. That's all. There was no credit check. It was nothing, but it was through. But I understand Flint was getting all this money ahead of time and investing it, because June, they didn't even pay it out until until October. So that was another means that we had savings, because we had to do books and all of that. But we actually had a 9-month plan that we paid out of our cash flow.
Mm-hmm.
Yeah,
you know, to do
but I think
that.
the other thing too was that we could not, I guess it's really funny when we went to the financial offices and the financial aids and whatever,
Yeah.
and because of our income, we didn't qualify.
We did not.
Didn't
So
qualify.
that wasn't really an option for
Yeah.
us.
Yeah.
And that's the other part of it as well.
Right. And when Lawrence said our jobs, because again, with mergers and so forth,
Yeah.
I was able to, and I think of being a Black woman
Mm-hmm.
and my experience that I continued to get with all of the banks, I was able to move up and I was in a bonus plan
Mm-hmm.
that was not the standard, because I was in upper management. And so those bonuses came in,
Yep.
also. And Lawrence was such, we didn't just say, okay, let me buy this, let me buy that. It was important that we put those funds, and Lawrence you had bonuses too. We put those away. And very importantly, every dime that I got, it always had to be 10% that went to my church.
Went to church.
And I think that that the tithing piece, that's another piece that was important.
Yep. Yeah. Absolutely. I think all of that just shows your discipline and dedication to one, your family, but also your church or whatever your mission is specifically. I think help you all be in the position you're in today.
I do think so.
So you talked about college. You talk about retirement. How is retirement going?
Love it.
You saved up enough money
Yeah.
for retirement. So what's working well, and outside of your income allowing you to do that, what worked well to get you to the point to say, you know what, I'm ready to do what I want to do, and I built up enough savings to do it.
Well, I think really, it just, I guess, the freedom, obviously the freedom that it gives us in terms of being in retirement, that we can do some of the things that I guess that
There's nothing that we really
want to do. But the funny part about it, Jeff, is that we seem to, and we laugh about it, is that we seem to have more money now than when we were working. And what's up with this picture? But then realize too that, obviously expenses are different too. That, buying clothes like suits and ties and whatever, all that kind of stuff. I got a whole closet full of stuff that I don't know what I'm gonna do with and whatever. Mm-hmm. But now that we're in retirement, I mean, we feel very comfortable that we can do things. We can spend time with our grandkids, and we can do things that we've always wanted to do. But either had other obligations, other things going on that we couldn't. But it's just a great time to be or to have.
Yeah,
and,
I think so. And our house,
and
our house is paid for, and that wasn't anything. Lawrence's philosophy was we could have paid the house off when I retired or whatever, but Lawrence was like, our cash flow is such, let's not move that, not move all of that to pay off the house. And so, he just said, let's just continue paying the mortgage. And we did because we could.
Right.
And so therefore we're just in a very comfortable position. And then again, one of the things that, if I could mention too, with the 401k plan, at one particular point, I had a lot of bank stock. They were investing. If you see the number of years that I've worked there, had a whole lot of bank stock. And Lawrence and I talked and made the decision to go talk to an outside manager.
Okay.
And so therefore, in going to talk, they put us in some particular investments to prepare for retirement and so forth. And so I moved a great deal of my 401k money to be actively managed outside. And then the diversification that came to prepare for a type of security that could pay income. Another security that we did was a type of insurance that built income.
Like annuity, you mean like
annuity?
And annuity that we did. So that was a huge thing that helped, pave the way to have, a monthly. And Lawrence and Lawrence did the same thing, but again, he still, with Social Security and all that, he still has funds,
Right.
that they are not paying out. You know, it's being invested and so forth, and I do too.
Yeah.
But that was another thing, was moving our funds out before we retired, some years before we retired, to be actively managed and to diversify.
Right.
Now, early on, did you all have an advisor early on, or did you all get an advisor later on in life, and Lawrence kind of led the decision making?
Well, I guess pretty much, I teased Dee. I said I was the CEO and chief financial officer.
He was.
Oh, yeah, okay.
He was.
Yeah.
And you know, as you know, the wife, you have to get to a point where you can accept that. You know, people talk about being submissive, you know, and allowing that. But I trusted his instincts. I trusted what he did. Now, another thing I would advise is to have conversations, have those financial conversations with your spouse, even if it's once a month.
Yeah.
You know, and so therefore, at one point, Lawrence made all the decisions and so forth. And then someone told me, if something happened to Lawrence, you don't even have a credit card in your name.
Oh, yeah.
And I didn't. And so, you know, we had to go through, and that was all a journey. That was a learning process, because there was no books except, you know, again, our education, our experience, that allowed us to get to a point where we are very thankful, grateful. He retired first.
Yeah, 2012.
In
I went out in 2012. You went
and
out
I
in
came out in 2015.
2015.
So it wasn't, and then you have to work things out, you know, years, age, insurance, you know, and all of those kinds of things. So you have to be on one accord, and communication.
Yeah,
communication is key.
Yeah, you got to talk about it, because, you know, and you can disagree with the decision, but without being disagreeable.
Yeah.
So I think that's the thing too, because I think in a marriage, there's, you know, you have to come together. You have to realize too that each one of you come from different backgrounds, sort of we talked about earlier. And you're going to either pick up some of the things that you know, that you're going to bring that with you, or you're going to make new things, or you're going to say, okay, I'm not going to do what my parents did. I'm going to do better than what they did, whatever. So I think you just have to kind of, you know, bring it all together and decide that, you know, this is what we need to do. And then you have to talk about, like Dee Dee said, is communication is the key. You got to talk about it.
Trust.
You have to trust each other.
Respect.
It's kind of like, I guess what I put in terms of, I put the word put, where you have to have patience, you have to have understanding, and you have to have trust. Those are the three things I think you have to have in a relationship, because marriage is work. It's work. I mean, you know, again, like I said, you come from different backgrounds. So you're going to have to kind of understand, and of course someone's going to take the lead. Like Dee Dee said, she was trusted to be enough to take the lead, and she provided a lot of good information, you know, so I didn't do it all, but you know, but I listened to her. Some things we did, some things we didn't do. But you know, some of the renovations she wanted done, we didn't get all done all as quickly she wanted them done.
Oh yeah.
But you know, hey, look, in other words, it's never off the table. You know, we always can have conversations about it. So,
what's one thing you all would have done differently? Like, you know, everybody talks about the wins, and sometimes they don't celebrate or not celebrate, but talk about the losses because they were lessons. And you know, what lessons, or what one thing, if you were to look back on and make a change on how you did it, and say, hey, you know, I would recommend it be done this way. I learned from it, but everything still seemed to work out. What would that be?
That's a good question. I guess maybe for me, maybe I would have, number one, I wouldn't have brought as many suits and ties as I think that is God. But I guess I really don't have any real regrets in terms of how we handle the finance, because like I said, I was blessed enough to work in that industry. So I got a lot of lessons from the people that I was servicing. You know, I watched things that they did right and things they did wrong. And I kind of took that as my steering wheel to show me, all right, you don't want to go that way. You don't want to go that way, and whatever, because these are the results of that happening. Because I had, you know, clients that, you know, that had a great income, whatever, but if I said, show me $1,000, they couldn't do it unless they pull a credit card out.
That's right.
And I said, you know what, I'm not going to be that person. I'm going to make sure that, we're going to have have some money on the sidelines and work from there. So I think that was kind of pretty much what I was.
The communication piece for me, because this has been a long journey of America. I mean, this is a lot of years, and I think if I had to do it over again, I think we were happy that we waited to have our first child, and we did the house and all of that. But I think our issue was truly on finances and being in agreement on that, and the fact that I don't want to use the word allowed, but Lawrence had that lead role.
Okay.
And so therefore, a lot of the decisions that were made were based on what Lawrence thought. And so I used to say, I contribute also. I contribute, I work.
Oh yeah.
So I just think, and I'm fine. I love him dearly, and I thank God for the position where we are. But maybe if I had taken a little more of a role, or if he had listened to some of the things, and that's communication.
Yeah, absolutely.
That was communication. So I just think with that, but I allowed it. And I'm thankful of where we are. So again, I was just being submissive.
Well, it's funny talking to you all. I feel like I'm looking at myself and my wife in the future, because we have the same conversations. She wants to do renovations. I want to save. I'm learning as much as I can from the work that I do.
Yes.
And what I read and stuff like that. And it's interesting because we argue, but she gets what she wants. It's just probably not on her timeline.
Yes,
so.
Timing. It's all about timing.
And you know what, Jeff? I think that's the difference in men and women. And there's a book out there that says women are from Venus and men are from Mars. And we are just different. And the one thing I would say to a couple, and you may have heard of this book, which is called The 5 Love Languages. And I wrote them down because I wouldn't remember, but there's words of affirmation, receiving gifts, quality time, and physical touch. And I would just say, everyone should learn their spouse's love language. And I think because Lawrence is one for affirmation. He just is, for whatever the things he's doing. I was a gift person.
Okay.
And so that was not his thing. So that caused, issues. But now when you get older and you mature and you think about materialistic things, that's not quite as important. So I had to grow out of that. And, but I still had to recognize, he likes affirmation.
Lawrence, I can see why you are a mentor of mine, because I am the same way. I mean, in fact, what I'm just so most impressed, by is, just having the mortgage paid, having the kids go to school without a college education. I mean, without having student loans. I mean, those are things that I aspire to do as well. And they are great points, because I think a lot of people think that, even with college education, to put it on the kids, or, student loans on the kids.
Sure.
And, you get, I was blessed as well that my mother she wasn't rich, but I was afforded a college scholarship for the first few years of my college education, and she paid for the last 2 years. And I came out, I didn't have any student loans, and that head start allowed me to buy a house early, allowed me to do stuff a little bit earlier than somebody else that had that burden behind them. And so you all definitely are a couple that I aspire, my wife and I, to do some of the same things. And she's going to get her kitchen renovations. It's just not going to be this year.
She'll get her bathrooms. We would have got them.
2015, when I retired, I still don't have my renovations.
It's coming. It's coming.
Blame it on the invisible enemy.
What advice, is there any advice that you all would give a newlywed or a couple discussing money, having challenges with money? I mean, you've given a lot of gems, but are there any other tips that you would give that we haven't discussed?
I think, and we might have mentioned it, sit down and do a budget. And of course, Dee Dee always wanted me to write it down and do it. But I guess in my mind, my head, or whatever, I kind of knew what expenses were and what the income was. So I kind of worked it that way. But I would encourage any couple to sit down, put it on paper, look at it, and decide which direction you want to go in. Because I think in the beginning, you have to, one, decide what you're going to do. Then you have to look in terms of commit to it. You got to be, what are you going to agree to do in terms of, or sacrifice or not have, whatever. And then thirdly, what are you going to succeed? How are you going to succeed in reaching that goal? What are you going to do to get there? So I think if you do that, like I said, if you stay with, decide the commitment and succeed, I think you can, you have that kind of return that you're looking to have. So,
and then it really becomes our money, because a lot of times couples are waiting until they're older. They have their jobs, their professions. And, when you come together as one, really it becomes not my money, but it's ours. Everything becomes that it can't be the big I. You've got to come together. And that's not an easy thing to do, because again, we were younger, but in our early 20s, younger. But at the same time, it was hard because I had worked and I had my money, period. And there were things back then. He wanted speaker, he wanted the chrome wheels on the cars and those types of things. So just talk about finance, because that is a big issue. Finance.
But I think the other thing too is that, I guess if we had to say the one thing we probably had the most disagreements, probably is finance, which we both have the most experience in. So that's, so with couples, I think if, or couples I've talked to in the past, that's where they have the most disagreements about, or arguments or discussions about, or whatever. So I think when you get to that, you have to choose your battles. You can, sometimes it's better to be silent than it is to speak up and, just blow everything up and whatever. Talk through it, work through it. And I think you have a better result, and you have less, dissension in your relationship, because a lot of times that goes into, believe it or not, that goes into other stuff. You do something, say, you didn't take out the trash, whatever, all of a sudden it become a big deal. You didn't take out the trash. Well, it really had nothing to do with the trash. It's that I didn't like the financial decision you made last night. Nothing to do with it.
That is true. And to be present, be present, and I mean, be there in the moment and talk about things, and all of that, because that's important. I think that's very important, to be present.
Have you all ever made a purchase that you truly regretted and that caused a big argument?
Oh my God. Yeah. Oh, I got to put this one out there.
He's recording.
Right.
So
Right.
A timeshare.
Oh,
a timeshare.
Okay.
That was huge.
Did you buy one timeshare, or did you bought one? And were you able to resell it?
No, to this day, we're actually making a donation. We're actually giving it away.
Yep. I will say my father-in-law gifted me a timeshare that I'm about to gift to somebody.
Chris and Mark, and Chris in particular. Now, when we're still in the process. It's closing and all of that. And Chris and them used it sometimes. But now we go on vacations with Chris and them. They invite us along, or we do things, and we just have other things. And that timeshare, and I must admit, he did not want to do it, but I wanted it because Mark was getting married. We could let them use that, and Chris was getting married. And how about they didn't use it? They wanted to go somewhere else, and we ended up, that was our gift to them, their honeymoon. That was one of their honeymoon and all of that. He didn't want it, and he would remind me.
All the time.
Well, see, I'm ashamed to even say it, because with my financial background, I knew better.
Yeah.
But, sometimes we as men, we give into the emotional part of our wives. And that was good, bad, or indifferent. I did it. because that was something that she really, really wanted at that particular time. Over time, she has realized that, maybe that wasn't such a good decision.
Yeah, I do. The maintenance fees just went up and up and up and up. And I tell you, this is God. He was looking and, did some research and all of that. We checked with companies who wanted a fee, to do all of this. And then he found this, that we could go back to the company and donate it. And they sent the papers, and the virus of the pandemic has slowed things down, but everything has closed and in process. But we have actually, and we just have to put a number to write it off.
Oh yeah.
And the thing we actually paid for that timeshare, so we didn't have like a mortgage or anything like that. It was paid for a long time ago. Yeah. And so therefore, it's gone. But I'm okay with it. I'm okay that it's going to a youth. It's in Florida where it's gone. Yeah, we've assigned it over. Yeah, so that was a big thing.
Well, I want to end on a positive, because I know I saw Lawrence about to run out the room when he talked about timeshare. But one question before I do this speed round, where I ask you 5 questions real quick. What investments have you all made, maybe outside of the 401k, that have worked out really well, and that you all would say, hey, you should consider this? Some people, they buy real estate. Some people, they, invest separately, maybe through E-Trade or Scottrade. Has there been any other investments?
I've done some outside investments. I have matter of fact, I have an investment account now. It's just funny you mentioned that, because my younger son, of course, I guess if there was a second career, would be financial. It would be in the investment side. Okay. And because he and I guess on a daily basis, he's calling me about various stocks in the market, and he and we've been investing in a lot of the various stocks, whether it's Apple, whether it's Shopify, whatever it is. But we do a lot of that, just individual investing. It's fun. It's what he does the research, and I'll tell anybody that I think as long as you do the research, on it, whatever, is no get rich quick scheme or whatever. Absolutely. But it's just the fact that, you look in terms of what the banks are paying now on your regular savings and whatever. I mean, it's still good to have it there, although it's very low, but at least it's going to be there. Getting in the stock market, there's a risk, and a lot of times, so you have to look in terms of where you are in your finances and whatever, whether you can take that risk. So they always used to say, if you can't afford to lose it, you shouldn't be in it. That's right. So I tell people the same thing. Look at it, and you got some, what I call a little play money or whatever, that you just feel, hey, I want to take a chance. And you think in terms of when you're investing in things that you use, like Dominion Resources or whatever. No, they're not going to be $100 share stock, but they pay dividends, and they're going to be steady. You're not going to probably lose your money. So if you need to have that money or need to get to it, it's there for you to get. But you get some of the more risky stocks, whatever, that haven't become profitable. And working from the banking perspective, whatever, I always looked at a company that I invest in a lot of times, especially are they profitable yet? That's the question I would ask. If they're not profitable yet, hey, look, this could go left, right, all over the place. So be very careful when you're looking at, and then again, looking at, like I tell my son, I said, now you're at a stage where you can afford maybe to take more of a risk than I can. And you can, because you have time to make it up. Yep. I don't have that time to make it up. If I lose X amount of dollars, I'm not going to be able to make that up. So I want to hold on to what I have. And your mom and I, we're going to enjoy what we've earned and whatever. And hopefully when we go to glory, that it would be a gift to our sons and not something. But the main thing we want to teach your kids is how to get it for themselves, not to wait for what I have, but to, get it for yourself. And that's the best thing, or best lesson you can teach your kids, is that if you take some of the values that I did with my father, whatever, how do you make money yourself? How do you get yours? And then what I give you should be a gift. You should not be, where you feel that's going.
I think this buzzword now, and you're young too, this generational wealth.
That is the buzzword. Yeah,
Yeah, that's the buzzword, the
uh,
generational wealth.
mhm,
And so therefore, Mark said if he had, because he's still Lieutenant Mitchell and
mhm,
all of that, but he said if he could have a second career,
mhm,
that he would really like to get into that. So he does play around, where I was told, when I told you I've been in wealth management, Gordon Maybe always told me he was a portfolio manager back then. I was young. He
mhm.
said if you couldn't afford to lose $500, that was the number. He said then you shouldn't.
You
Then
shouldn't be in it.
you
Yeah,
shouldn't do that. So
yeah,
that's what he plays. I mean, that's something he does. I
yeah.
do boot camp. I
Okay.
mean, so I don't do that. That's something I like to do. A true boot camp is what was on my bucket list that I do.
I got you. Okay, perfect.
Thank
Perfect. Perfect, perfect. Well, I don't want to. I want to be respectful of you all's time. And the last part of this, we do a closing round. It's a speed round where both Dee Dee and Lawrence, you close your eyes and you have to point to the person that has the attributes of what I'm describing. And so the questions are real simple. And so I'll ask a question. And Lawrence, you either if she fits that profile, you'll point to Dee Dee, and Dee Dee the same way. If Lawrence fits that profile, you'll point to him. All right.
What about if I fit it? Oh, well,
No,
okay.
You,
but
you
Okay.
can
I
you,
got it.
but you can point to yourself. You can point to yourself if that fits you. So
Okay.
close your eyes, and I'll say the 5 questions. So who spends the most money? Who saves the most? Who is the risk taker? All right. Who is the most organized? All right. And who has the biggest ideas and goals? All right. All done. All done. So I recorded it, so you'll get to see who pointed at who. But
right.
obviously Lawrence is the risk taker and the guy that has the big ideas and goals. That's what Dee Dee said.
What I
Right.
said.
Yeah.
Yep.
Yeah.
That is.
Yeah.
Yeah.
Well, I appreciate you all taking the time out. Thank you all for joining. Again, this was part 2 for our couples episodes about just managing money as a couple. So thank you all for providing this time, and I appreciate it.